Okay, let's now look at the technicals. The market of late may be a bit wobbly, but hopefully slowly trying to digest developments and look for some consolidation at these lower levels. So to help us take a closer look at the chart formations and give us an idea what to do and what these charts are saying, let us listen to our Chief Technical Analyst, COL's first Vice President, Mr. Juanis Barredo. Juanis?
Hello, Marvin. Thank you for that. Hi. Yes, and good afternoon, everybody. And I'll just get your presentation. Okay. So today we want to talk really about, as they mentioned earlier, an uneven type of recovery. And that's because, of course, depending on where you are in parts of the world, you might really be seeing a whole lot of difference in the way some countries recover as compared to some others because of the ability to be able to deal with the pandemic. And unfortunately, a lot of the things that we've been seeing to the Philippines lately has shown a lot of what I would call technical setbacks. We've had a lot of headwinds, and we're dealing with that now. And it's really because of that that we're going to see a lot more choppiness into the market moving forward. However, I would still agree that I am quite optimistic that we are going to pull out of this. The whole condition is just about time. How long will it take? And what type of situation will the market present to us so that we can try to take advantage of this as we see that? Now, in our ability to be able to look into the market, you can see how the whole world is looking at the Philippines as of the particular moment. And if you were to look at this particular graph here on the left side, I know April showed you something of the sort. This is something similar to what she showed you, but I just want to be able to highlight how the Philippines has managed to pull back as compared to the rest. And all this chart is simply telling you that we're the last in the pack. And that means we've been being sold down. We have not seen a healthy amount of demand come back to the Philippines yet. We are clearly an underperformer, whether you look at it in the context of the entire world. And because of that, it's still taking some time to be able to renew that optimism into the Philippines. Well, I think April discussed to you why, and we'll have to be able to try to make an assessment of how long that will take. If you were to look at Asia and the Philippines in the center of that activity, this is the Philippine index you see here as of yesterday. And if you look at the rest of the other markets in Asia, I mean, we're not the only ones going down. You can see that there have been corrections that have been taking place from Japan, China and Hong Kong got walloped in the last few days because of something very special to them. But there are also a few other countries that managed to show weakness, like Thailand, Indonesia, Malaysia, and Singapore and India have been really resilient, despite we heard some cases of pickup in Singapore and more so in India, but their market seems to have weighed in well so far. But what I wanted to point out over here is that we're still seeing quite a bit of corrective pressure into some of these, although some of them have started registering oversold conditions already. And of the 9 charts that you see over here, about 7 of them already are registering oversold conditions into the market. Now, why do I need to highlight that? Well, because normally after a market hits an oversold condition, they may still have a little downside left, but they have the capacity to rebound after that. Now, we did not see very special announcements like we did today when we just heard that we were going to be going back to ECQ in a matter of about a week's time or so. And that particular condition has to be fully digested by the investing public all over again. And it's really because of that that we saw the index take a wallop and fall down the way it did today. Now, before I go back into the Philippines, I just want to look at the other markets just because I want to see what my external environment looks like. Because if I'm trying to gauge how fast we can recover, I just want to make sure that I don't see any critical items are taking place around me in terms of the external market conditions that could defer or delay the same thing. So in our capacity to be able to look at that, we'll look first at the S&P 500 because the US is still one of the biggest markets in the world. And it's nice to see that the US market is still flowing upwards despite that heavy valuations, as Zach pointed out to you guys earlier on. And the reason is because there's just so much liquidity into their system that people don't know what to do with it. Of course, a lot of uh, the the forecast of funds that the government did as a measure for stimulus put this into their pockets, and a lot of them have been throwing a lot of that into equities, and that's the reason why you see the U.S. market, despite it being expensive, is still upward trending. However, I think we're going to start seeing some hiccup situations soon, and it may need to be able to pit stop after perhaps trying to be able to climb up a little bit more. And that's something we're going to have to factor in because it's really hard to say when would that hiccup actually become a much larger drawdown. And I think the only time that will happen is if you see the 50-day exponential moving averages, like areas like this or areas like this in the Nasdaq. If you see these areas start to break, that's the time that we're probably going to say, whoops, this is going to probably pull back more, and we might see some reverberations of that correction into markets such as ours, even if we've corrected already or even if we're oversold. So it's something that we're going to have to keep an eye on. Second is the worries about inflation have tapered. And it's really quite striking because if you were to look at the commodity index, that's this chart here on the right side, you would see that the commodity index is actually still climbing. And so that means a lot of commodity prices are increasing their value, contributing to the inflationary situation. However, if you were to look at the 10-year bond yield here on the left side, it's actually been curving down since it's very, very heavy push up to about 1.7%. And it's now gravitating closer to about the 1.20s or 1.30 areas. Now, I think enough is enough. I think it might have already pulled back where it should have. Maybe a little rally or consolidation time may be seen soon. I think at the maximum, if it's going to pull back, a maximum maybe of 107, that will be this second violet line you see over here. And I think that would probably be the maximum end of it. After that, I do think that yields may need to rally. And so we might be pushed back into a situation where an increase of yield is probably going to try to affect the market again. If that happens, maybe you might see some pressure into the US market again. But we're watching the commodity index very closely because I think the Fed governor did say that it might still take a few months before the accelerated pace of commodities going up will start to slow down. And so that's something that we're going to have to bear with into the short term. Now, based on the movement of the US dollar, I'll look at the US dollar first and then we look at the peso dollar. So this is the US dollar index you see here on the left side. And if you see a longer term chart of this, you're going to see this coming from way up here and coming all the way down to this base, eventually gradually turning around and now making a recovery. It looks like the dollar is trying to be able to make a particular or at least a medium term bottom. However, the rally that we've seen to the dollar has been quite excessive already. It hit its previous high in terms of this area here. And I think it needs to be able to engage a bit more wider correction. And I think proof of that has actually been shown in the last couple of days. So it looks like timeout first for the US dollar. It might be able to give our peso dollar rate some breathing space. So if you look at the peso dollar rate here on the right side, you will see similarly that it's managed to be able to pull back from the 51 high that it generated and is now starting to be able to make a little bit more of a consolidating type of movement, roughly between 50-50, maybe always to a low of about maybe 49.90 is where immediate support is. If somehow that 49.90 can break, then hopefully we can ease back somewhere between 49.70 or even 49.30 if things go well. But I don't think that we'll probably see this go all the way back down here for the time being. More likely what will happen is it's probably just consolidate sideways first, giving time for this to do the same, perhaps create a higher low in the dollar, and we may have to contend with maybe a depreciation, but maybe after a couple of weeks, maybe hopefully a couple of months. So in terms of the external conditions of the market, just summarize that the Philippines seems to be the last in the terms of what markets are looking for as a potential investment. So that means if we're going to look at it in the Philippines, we're going to say we are going to be having to be able to generate the recovery on our own locally. And it might take any other foreign investors a later period of time to be able to realize the value they see here and may come in later. that's good in the long term. And the reason for that is because since they're almost empty with what they have in the Philippines, if ever they start a major campaign to finally come back into the Philippines, I think that will set off a good capacity for the market to eventually make a more durable recovery. But I think Zach also told you earlier that these things are going to come in spurts and perhaps not going to be a streamlined fashion. We're going to have an up and down type of movement, and we have to be able to prepare for that. Now, the US market, I don't think would be too much of a headwind immediately, but it's only when I see the 50-day EMA averages start to crack, then we may have to say that the US may uh, push out a much more heavier weight into what other markets can correct. So US is still quite strong. In terms of Asia, Asia has already been biting. We've seen that a lot of Asian markets have corrected. This is really probably because of what we've seen in COVID and what it's doing selectively to this. That's why it is an uneven recovery. And there are even some countries that are even much worse off than the way we are. In terms of Hong Kong and China, they've actually dropped recently, but this was due to the crackdown into the tech sector that they've had an ability for the Chinese government to try to be able to control certain influences on these guys, especially as many of these are trying to list into the foreign markets. And now they have to be able to open their technology, their user base, and all of that to other countries. And it's something that, of course, the Chinese government is trying to control. And then in terms of commodities, I still think that inflation threats are still there because I haven't really seen a big movement by commodities to come down so much. So it's something that we're going to have to be able to watch over. It might extend to a few months more. I hope that if bond yields respond, it might not be too long, but I think bond yields may be coming to an immediate low point for the meantime. And there could be a little bit of an uptick in that once the correction finishes. In terms of the dollar and the peso, looks like they're both correcting at the same time. So I hope that the depreciation of the peso could probably ease for the meantime and release some pressure on us. Anyway, the pressure we're seeing in the Philippines, that come from that, it really came because of the announcements of the ECQ that we just saw today. So looking into that today's event, April called it a bloodbath, and the reason for that is because, of course, we sank quite deeply today, and that big decline was really stemming because of that surprise announcement that we slipped back into ECQ, maybe into the next few days or in about a week's time, and we're going to stay that way for I don't know how long. And so, although yes, they told you the initial date, but as you know how it goes, usually they'll give you a certain period, and then toward that end of period, they're going to delay it a certain period depending on what happens. And unfortunately, it looks like we're in the beginning portion of this spread of Delta. So I really cross my fingers and hope it doesn't take too long. So the immediate impact is that the index broke below 6,350, which to me was a very important support area. I hope today was just an aberration. I hope we can see a bit of a rally on Monday or Tuesday to try to lift ourselves up there, and you'll see why I think 6,350 is such a crucial area. I was really hoping that we could try to rally closer to 6.6 or 6.7 first before we see this type of ECQ threat, but unfortunately it came sooner rather than later, and I didn't really like that. And I think the short-term repercussions, I think, are going to be very clear as the volatility is going to increase. So the next support level for the market is between 6150 and that 6020. So 6150 is the previous low that you see here. Now, let me talk about a little wider or bigger perspective, the Philippine index. You can see the situation. So this is the correction that we've actually seen. This big decline is what COVID did when it was first introduced into our country. And since that time, in that period in March of 2020, we saw the Philippine index recover relatively well. I mean, from 4,800 coming closer to about 7,000, maybe 7,200 on this high note, and then pulling back not so long ago. And then this is what worried me when we saw a rally here that was actually a lower high than the previous one here. Normally, when you see a lower high situation in a trend, that tells you that your uptrend seems to be losing steam. It doesn't tell you you're in a downtrend yet, because in order for that to happen, I may need to see this index break this 6150 low. So if that 6150 low breaks, which is another crucial support for us, then you will see that the short-term trend of the market is turning downwards. And that's what I mean by we may have a deferral into the recovery swing, and because we probably hit another pothole, and we might have to be able to see much more gyrations in terms of corrections. I really hope that on the maximum, in case things go wrong, that the maximum end could be somewhere closer to 60-20. But I will not discount a tiny possibility that we could sink all the way back here if we don't do things correctly in managing our situation here. So this is what I wanted to see in terms of an index. I wanted to be able to see the index attempt to make a pretty good recovery, something similar to these two lines that you see here. We've broken 6350 a little bit. I hope it can try to rebound to try to regain that support. But if not, 6150 is the previous low here. And I was really hoping that we do this, back off and then rally. But unfortunately, we saw a big decline today. So what I did not want to see is this. So the first situation is where the market now extends its reaction, falling all the way back down to 6150. And hopefully that this low here will hold. Because if this low holds, then at least that your market will hold sideways rather than down. And if 6150 breaks and it falls a little lower and closer to the 6020 level, this is where this downward channel is currently situated. If we see prices go all the way back there, two things can happen. It's either it rebound from here, or worse, it will do something like this and try to be able to threaten to break below that 6020 level, in which case the next support will be 5700. So I really hope that it's either we're seeing the blue version you see here or the orange version line that you see here as a potential situation for us, because as long as we do that, then that means that I think the waiting time is not going to be too much. We should be looking at this opportunity now as an opportunity to be able to pick up stocks, because that's when you would get that situation. Only when these radical announcements take place, causes a bit of a disruption. The recovery is still going to come. Please remember that it will still come. It's just a matter of timing. And so now with prices making that lower arrangement, you can see that potential opportunity for us to be able to take in. The only difference is that here I could be a bit more aggressive, whereas in this one I may have to take things down slowly over in time because it may decide to cascade up and down before we would get that reversal. Now we're to look at the different types of subsectors into the Philippines. I took this as of yesterday, and if you were to look at the movements that we've had, we actually have the services and commercial industrials actually relatively okay. They're still also making higher lows so far. The top three issues involved in those sectors would be ICT, Pure Gold, and RHI. Whereas in the commercials, it would be Jollibee, Aboitiz Power, and Emperador. They were the strongest of the top five of those index members. Secondly would be the mining and the financials, of which case into the mining, not so bad in terms of the movement. Of course, I know we did have a decline today, but Nickel Asia, Semirara, and Philex were the top of mind for issues in those sectors. And in the financials, it was BDO, BPI, and Union Bank. Unfortunately, Metrobank and Security Bank have been a very big laggard. I really don't know why, but it was quite painful to see them react all the way back down to the previous low, if not lower. And normally when I see that, I tend to be more defensive rather than aggressive in my positioning. Then we have property and holdings. These were the laggards. If you notice the rally that we saw, they could not even rally back to where they were about a year ago. And they only managed to make a 61.8% recovery of the decline. And here they are coming back down again. But so far, at least, they've not broken the previous low. So at least that's one good thing. And as long as they don't, I would look for potential buy movements, especially that they're coming closer to the supportive end of the range. The top three stocks for them would be Ayala Land, Megworld, and Robinsons for the property, and SM, JG Summit, and Ayala Core for the holdings index. Now, I want to be able to just look at the potential for us to move. I mean, being a trader, you want to be able to concentrate where there is action and where the flows are generous. And the reason for that is because as you know where volumes tend to be able to participate on, more likely this will be the stocks that can concentrate or normally move first and wider, especially when they're coming off a rebound. Now, if you're looking at those in my focus list, I would concentrate on issues that are on this side. So from these green high headers all the way to this blue one. And I would fall a second degree further for this orange one that you see here on the right side, because this list of stocks here on the right side have been really underperforming. They've touched recent lows, if not broken them. And it's because of that that the trend adjustment here is now pointing a little bit sideways to down. And so my worry with this is that if they make recoveries, they've got a lot of resistance areas to pass, and that will cause a lot of choppiness into the recovery, which might make it a little bit more tough. Although, yes, your argument might be they fell so deep, maybe the rally can be significant as well. True, but I think it might not just be an easy bounce. So if you're going to do a balance in terms of your positioning here, you can put some money here into a potential rally, but I would try to be able to maintain majority of my activity into these issues over here. The concentration is sticking to the issues that are strong, the ones in green, and then perhaps a little bit into the next level, so that you see in this area here. And I put all of the index stocks into this list, and I also put what I call the new kids on the block into this list. These are the relatively new issues that have come out that have taken a good fancy of the market, and they've managed to be able to hold up relatively well. So I would assume that when the market attempts to make a recovery, I would see that many of the issues you see here will likely participate well into that recovery. So keep these stocks in this area here under your focus list. I pointed out those that are in green are the stocks that I've been seeing recent oversold conditions in. So potentially there could be recovery in them. But again, like I said, please stick on the issues that you see on this side of of the tables. So just to be able to show you why I'm leaning. So here's an example of the stronger types of issues. I mean, Emperador was one of them, although yes, I know some of them corrected today. All HC, Ayala Land Logistics, managed to be able to control the reactions they've been making. If you notice, unlike Meralco, which here on the right side, you saw very deep declines taking place and still threatening to push lower, given where they are today. So it really is you want to stay with strength. You want to look for durability into the market when you're looking for a potential recovery, because you can see that the flows are going to that direction, and they will likely continue to stay in that direction when that recovery comes in place. So if you want to be a bargain hunter with the weakest stock there is, go ahead, but please reduce your volume size in those ones and put a much more generous size in the ones that are showing more durability. And I think you may be able to control a lot more of the risk factor there, because these have the tendency to probably go down more rather than the ones you see here on the left side. So in summary, the PSE started to be able to correct farther than what we initially expected. And of course, the trend line today was threatened because prices broke to that 1650 area. But hopefully the oversold conditions we're going to be seeing, if not again, should be able to give an offer of a potential recovery soon. Hopefully we can reach into that 6,600 or 6,700 area first with the potential rally. It might back off later, but I think that might be another opportunity for you to be able to buy into as well. Now, what we want to really see is a higher low base. So if the index falls back down to 6150, that's a same base. And that doesn't give us too much to go on. That means your market will get stuck sideways. And so in a sideways market, we will just range trade. And the opportunity for us to see accelerated moves upwards will go down. And that's why we really want to see a higher low conditions preferably. Now, after that support retest that I was saying, I think you will see a market that will probably be much more sturdy, despite a lot of the headwinds that we're still going to have to face, because there's still a lot. And that's why I would expect a recovery to delay a little bit. So like April said, you may have to be patient and just try to be able to keep yourself in the much better oriented issues that are taking good followings in terms of volume. That should be able to save you a lot of money in terms of potential risk into the downside. Then look for potential technical openings as, of course, the gradual economic reopening takes place. Please, it will take place, okay? It's just a matter of time. Zach showed you charts there of Asia and other Western countries that have already shown economic recoveries. Yes, they're further ahead into the vaccination policy, but we will get there over in time, okay? So as stocks are weakening, it is the opportunity that you want to look for to be able to take in good positions. You don't have to be aggressive. You can take it little by little, take advantage of the prices as you come around to be able to see it. But please take advantage of it when you're here, because you don't want to be buying stocks only when they're racing upwards already. I mean, it kind of defeats the purpose of trying to be able to look for the potential value and the growth of buying into that when prices are still relatively attractive. And you know what? When I made this report, finished it yesterday, I already wrote down there, if an ECQ shock comes, take the chance of slowly buying into this transitory weakness. So I was actually anticipating that ECQ was going to be announced, even if they didn't announce it 2 days ago. I was thinking that they probably would wait to see a little bit more of a spread take place and problems surface before they actually did it. But they did it earlier than what I thought. So I don't know if that's a good thing or not. But unfortunately, because we have to deal this, it took the market by surprise, and that's the reason we saw a very big decline today. So unfortunately, my preferred support area at 6350 was broken today. But I think the next major area should be 6150. I mean, that one I hope really holds, because if that, at least the market can hold sideways. But if not, then 6020 would be the maximum end of that. So I hope that you can look at these areas of potential buy zones. Like I said, don't be aggressive if you're buying the weaker ones. Try to be more aggressive if you're buying the much more durable ones, because I think over in good time, once we go ahead and get more vaccinations into place, and we are now getting used to having to live with COVID and the variants that come out, I'm sure we're going to go back into normalcy, but that normalization process may take some time. Just take advantage of the weakness that you have now, because eventually we're going to gradually pull out of it. So I hope that you guys have managed to be able to take a good view of what the market can offer to you. And I know you might, be looking at very negative conditions on what you have. And remember, the crisis that we're seeing right now will eventually force these companies to be able to do a much better job at weathering the storm. And they started doing that more than a year ago. So many of them should be able to take advantage of what they did there to retool. And I hope that that should be able to contribute to them to eventually pull out of this situation when things start to open up a little bit better. So I hope that you can take advantage of that. So with that, ends my presentation today, and I hope that I've managed to be able to give you a view of what the technicals look like. And I'll join April and Chairman in terms of the questions that you guys would have to ask us today. Thank you very much. Now, I want to be able to just look at the potential for us to move. I mean, being a trader, you want to be able to concentrate where there is action and where the flows are generous. And the reason for that is because if you know where volumes tend to be able to participate on, more likely this will be the stocks that can concentrate or normally move first and wider, especially when they're coming off a rebound. Now, if you're looking at those in my focus list, I would concentrate on issues that are on this side. So from these green headers all the way to this blue one. And I would fall a second degree further for this orange one that you see here on the right side, because this list of stocks here on the right side have been really underperforming. They've touched recent lows, if not broken them. And it's because of that that the trend adjustment here is now pointing a little bit sideways to down. And so my worry with this is that if they make recoveries, they've got a lot of resistance areas to pass, and that will cause a lot of choppiness into the recovery, which might make it a little bit more tough. Although, yes, your argument might be they fell so deep, maybe the rally can be significant as well. True, but I think it might not just be an easy bounce. So if you're going to do a balance in terms of your positioning here, you can put some money here into potential rally, but I would try to be able to maintain majority of my activity into these issues over here. The concentration is sticking to the issues that are strong, the ones in green, and then perhaps a little bit into the next level, so that you see in this area here. And I put all of the index stocks into this list, and I also put what I call the new kids on the block into this list. These are the relatively new issues that have come out that have taken a good fancy of the market, and they've managed to be able to hold up relatively well. So I would assume that when the market attempts to make a recovery, I would see that many of the issues you see here will likely participate well into that recovery. So keep these stocks in this area here under your focus list. I pointed out those that are in green are the stocks that I've been seeing recent oversold conditions in. So potentially there could be recovery in them. But again, like I said, please stick on the issues that you see on this side of the tables.